Hello, everybody, and welcome to our show today. Today, we're going to be diving in. We're going to be talking about how you could build business credit from the ground up. We're going to go probably about 30 minutes or so, and hopefully, we are able to get all of this done in that time. For those of you watching live here on YouTube, my apology, I'm about 5 minutes late. Had some technical difficulties today with the PowerPoint, but we are now ready to go. So, for those of you that don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite. And at Credit Suite, this is what we do. We help business owners build business credit for their EIN that's not linked to the personal social security number. If we can help you anywhere along the way, feel free to reach out to us, 877-600-2487, info@creditsuite.com. Also, don't forget to grab our free guide that gives more detail than we'll even be having time to dive into today, which is at creditsuite.com/EIN. So remember, whenever we talk about business credit or corporate credit, we're ultimately talking about credit that's under a company's EIN. Okay, so it has no association with the owner's social security number at all. Remember, this is two separate credit profiles: credit profile for your business, credit profile for you as a consumer. I am not going to be talking about your consumer credit today. We are only talking about this credit profile that's linked to the EIN number. So business credit and personal credit are two completely separate things. And if you don't have them separated yet, well, we'll teach you how to do that during today's webinar. It's exactly what we're going to be talking about, is how you can separate these two. And the scores are very, very different in consumer and business credit scoring. And that could be a huge advantage to you, as we'll be talking about as we dive in a little bit more. So remember, this credit's based on the business's ability to pay, not you as the business owner. So what's nice about business credit is it really lets your business fund itself, because you're building a base credit profile, you're building a base credit score, you're using the established credit profile and score to get credit. So it allows your business to stand on its own, because you're getting new credit based on your business's ability to pay, not you as the business owners. So as a business owner. So since the business qualifies for the credit, well, then done right, there's no consumer credit check and there's no personal guarantee. Now, it doesn't matter if you're a startup or or a very well-established business. It doesn't matter if you have good consumer credit or horrible consumer credit. This still is equally beneficial. For one, no consumer credit check means there's no inquiries on your consumer credit report, which could really restrict your ability to get other kinds of financing. If you do have credit issues, well, since there's no credit check, that's not even a factor. And the guarantee, of course, is very important as well. We never want you to be personally liable for what happens in the business. As a matter of fact, I was just at a conference yesterday when they were talking about mergers and acquisitions. It was an M&A conference, and this was one of the biggest reasons that business owners get out of selling their businesses, because they don't want that attachment to a personal guarantee. So again, separating that liability becomes very important. And again, when you build business credit, that's exactly what you're doing. You're separating the liability from you as an individual and the business itself. So then that way you're not personally liable for those business debts. Now, there are a lot of benefits here. For one, that you can have much greater credit limits with business credit cards than you will consumer credit. And the reason for that is because as a business owner, you just have a greater need for capacity than an individual does. And that's one of the core components of credit, is capacity. How much capacity should you have? What kind of limits should you have? And again, an individual just doesn't need limits as high as what a business does. That's why as an individual, you'll never get credit cards as high a limits as what you're able to get for your business. And again, that is a really big benefit, because 10 to 100 times the amount of your current consumer limits is what you can expect to get on business credit cards. And this is why we see people getting $2,500 to $5,000 business credit cards about 30 to 60 days into the process. And this is why they're getting $50,000 plus credit cards 6 months into the process. Whereas with consumer credit, you couldn't even establish a FICO score unless you have credit reporting for 6 months. In the business world, you can start to get to $50,000 accounts in that time frame. Sounds unreal, but it's very realistic, because again, this need for capacity, because business owners need access to higher limits, and that's exactly what credit issuers issue. So according to SBA, as I mentioned, those limits are 10 to 100 times higher than what we'll find with consumer credit. Now, when done right, business credit can be built without that personal credit check and without you putting the social on the application in some cases. So what's happened is in 2016, a new law came out that it was designed to reduce money laundering. And the way that it works is, since businesses have always been able to open and get all this credit and financing from banks without even providing verification of the business owner, the government stepped in and said, look, if you are a major bank and you're issuing, or if somebody's opening up a new account with you and you're a major bank, you now need to verify date of birth and social. So typically you won't see the social security number on the application. You'll see it on a separate application when it just comes for the purpose of verification. And I just applied for a WEX, or a fleet card the other day. They did it right. The application had no place for a social, but then on the next page, it clearly said that you needed to provide your social and date of birth for verification purposes only. So be careful about that, because now it's becoming more common that if the credit card you're getting is issued by a major bank, they may ask for social for verification purposes only. Remember, they need your permission to pull your personal credit. So make sure you're not authorizing a personal credit check or a guarantee, because the goal here is not just a personal credit check. The goal here is to remove or prevent inquiries from even hitting your consumer credit report. Look, even though inquiries account for 10% of our total FICO score in the consumer world, inquiries don't usually adversely affect your ability to do much as a consumer. But in the business world, they really do. We have financing where you can get credit lines, even as a startup, up to 150 grand. One inquiry can cost you $20,000, $25,000 in funding with that one program. They do not want you to have inquiries, especially from major companies like Chase and Citi, on your applications. The problem is that a lot of business credit cards like Staples at Office Depot are actually guaranteed. They're issued by Citi. So if somebody sees Citi inquiries on your credit report, for example, well, then that could really inhibit your ability to then go out and get real credit lines for your business. So we need to minimize these inquiries to get you the most amount of funding. Now, business credit can quickly be obtained regardless of personal credit quality, again, because there is no consumer credit check at all, and none of these accounts you're getting are reporting on your business credit report. It's a really big deal. Why? 30% of your FICO scores utilization. This is the biggest mistake to date that I see business owners make. I've now changed my language from this is one of the biggest mistakes to it is now taken first position. It is the biggest mistake I see business owners make. They start a business, they want to grow the business, they rely on personal credit cards. The expense to grow the business, start the business, is way more than they accounted for, because as business owners, everything takes longer than we anticipate and costs more than we anticipate. And then they quickly start to raise the balances on their credit cards, dramatically lowering their credit scores. And then their ability to use their consumer credit to get funding for the business is ruined. Do not ruin your personal credit to be using credit for consumer credit to fund a business. Consumer credit was never designed to fund a business. The limits are much smaller. So if you start to put balances on your consumer credit cards for business purposes, you start to put way more on those credit cards than should be on there. That dramatically lowers your score, because a third of your credit score is utilization. And then you ruin your ability to use the consumer credit for what you could use it for, which is to get access to more business financing. So remember, if accounts report in your business credit reports utilization, it's not going to affect your FICO score, because they're not even reporting on your consumer credit reports. You can max these credit cards out and not drop your consumer FICO score even 1 point. Now, remember, business credit's not built automatically. You have to actively work to establish it. Here's one of the biggest reasons most business owners don't have it. Here's the process. The process is that as your business grows and you get to 9, 10 million in sales or more, you start to bring in financial savvy people in your company. You bring in finance controllers, you bring in CFOs. These people understand business credit. They know how to build it. So inevitably, as businesses get bigger and bigger, they bring in financial people that understand what I'm about to teach you today. So by default, middle to larger businesses, 10 million plus, by default, automatically start building business credit because they have financial savvy people that know how to do so in their organizations. But again, the problem is that small businesses don't know this process, and credit issuers rely on our ignorance, so they just won't tell us how to do it. They won't explain it. They won't tell you it's there. You're not going to go to Target or Home Depot or Staples and check out and then ask you if you want a business credit card without a guarantee. it's a secret thing. It's left under the radar because the credit issuers rely on small business owners not knowing anything about it, and only medium to larger size businesses have the finance people that do know how to get it. So this means that you have to actively work to establish this. This won't just by default happen because much of the credit that you're going to get won't even report to the reporting agencies. Okay, it can be done easily. It can be done quickly if you have help, not as quick if you don't, but you can still do it easily and quickly, much faster than you can with consumer credit. But again, you have to actively work on this because 97% of trade vendors don't report your credit to the business reporting agencies. So you may think you have credit with all these vendors, but if none of those vendors report it, then you're not actually building any business credit, even though you're using these vendors. So you have to be very intentional when building business credit. Vendors are a large part of the process because they help you build that foundation. Remember, the goal here is to build a credit profile, build a good credit score, then use that to start getting the credit you want. Well, it all starts with the foundation. If you think about building a home, you start with the foundation. So you've got to build that foundation to make sure that you're credit worthy before then you even begin that process. And then as you do so, then you establish a credit profile, then you establish a credit score, then more credit issuers are issuing you even more credit based on that established credit profile and score. It's going to make more sense as we dive in. So don't try to do these steps out of order. You're going to be turned down all the time. This is probably the second biggest mistake that I see business owners make is they try to skip steps. They listen to this kind of training and they go, well, that step one sucks. I don't want to do that. That's boring. And then they skip to step two and they start getting denied and they don't know why. And it's because they skipped a step in step one. I do live streams Wednesday at 4 on Facebook and I get all these kind of questions of, hey, I failed. This happened. I tried to do this. I didn't succeed. And in almost every single case, the reason for not succeeding is because they're skipping steps. They're doing things out of order. So you can't start at the top of business credit, just like you couldn't build a house from the roof down, right? However, if you know the right steps, then you can start with the foundation, build up what you need to do, and then build all the way to the top, which in this case, the roof per this analogy is cash credit, Visa cards, MasterCards, American Express type cards. So it really does start with this foundation. We call this fundability. So it really comes down to how fundable is your business. And that really is what credit issuers and lenders are looking at this initially. So establishing professional credibility it makes a huge difference because you've got to be credible to lenders and vendors to get any kind of financing. Okay. So think of it like this. This becomes even more important in the very beginning because you don't have any business credit established. You're trying to get credit issuers to issue you credit when you have no credit established. So how do you do that? Well, you build a real credible foundation that makes you look fundable. Then these initial credit issuers look at your criteria, look and see that you're credible. They give you initial credit. And that's the first stage you need to happen to build that profile, to build that score, which is what all the other credit issuers are going to look at to start issuing you credit. So this starts with the basic stuff, professional looking website and email address. Now, credit issuers are not going to look at this. Lenders will. Lenders will dissect your website to learn more about you and what you do. But you should make sure that you have a website and that you have an email address that's a professional email address, because these are things that the lenders and credit issuers are checking. And you really should set up a professional email address you're using from the for the business from the beginning of the business, such as info@creditsuite.com is ours. Look, a lot of this data comes from LexisNexis. It comes from a place called the Small Business Financial Exchange. If you're not familiar with that, you should look at our Facebook page, facebook.com/credit suite. We just did live streams on LexisNexis. We did live streams on Small Business Financial Exchange to explain a little bit more about how this whole process works behind the curtains. But let me give you some insight. LexisNexis, for example, has every email address that you've ever had on file. That's what actually happens. So what happens, and by the way, apparently Alexa that's sitting on my desk does not like the fact that I said LexisNexis, because that actually is triggering her to take action. So what happens is you need to make sure that you have a professional email address right from the beginning. Because when you have a professional email address right from the beginning, then that's what's actually stored for your business. And this is what a lot of other lenders and credit issuers are cross-checking. So having that website set up, having the email address setting up, get a business phone and a fax number. You don't want to use toll-free, or you don't want to use a mobile phone or a home phone on an application ever. It could be voice over IP. Avoid Google. Voice over IP numbers, don't know why, but a lot of credit issuers and lenders don't like those. You don't need a fax number. But if it asks for a fax number on an application, you should include it, because if you leave blank items on an application, then it's only going to hurt you, unless it's something that obviously should be blank, like an address to box. Well, if you don't have a second address, like a unit number for your building, well, then you wouldn't have that. But if they're asking you for something as basic as a fax number and you don't have it, it just doesn't look, it may make you look established. And get that phone number listed with 411. Look, 411 is one of the basic requirements a lot of lenders and credit issuers have for good reason. You can't fake it. 411.com is not 411. You can't go list your own phone number with 411. You can't do it. This is why lenders and credit issuers look at this criteria, because you can't go do it with 411. They have to pick you up on Google and Yahoo and Bing. And once you start putting your business out there and all these listings for your business start showing up, then 411 automatically picks you up. If you want to expedite the process, use a service like List Yourself. List Yourself is a great service. Now, again, there's going to be maybe other options out there that are cheaper. List Yourself, for the service we use for our clients, cost about $30 a month, even though they do have a free service. But get that phone number listed with 411. Some of your initial vendors will look at that one criteria. And as I mentioned, the phone number should be toll free as well. I think I mentioned that. Look, if you're a local pizza shop, maybe you can get away with a local phone number. Nowadays, if you're not a local pizza shop, you're pretty much doing business nationwide in most industries. So having a toll-free number adds to that credibility. Okay, you also need to set up a business bank account. Credit issuers will not ask you for this. The business credit is no doc. It's unsecured. It's unsecured, which means there's no collateral. It's no doc, which means there's no bank statements, tax returns needed for approval. It's one of the reasons it's some of the easier type of financing to get. But a lot of times they will ask you for a bank reference, meaning you're not even going to have a reference for your bank if you don't have a business bank account set up. The reference could just be somebody that works at that bank where you have that business bank account set up. Make sure you have any necessary licenses that you need. Sometimes it's a city and town. Sometimes it's a state. Sometimes it's a county. Sometimes it's an industry that you may need. And make sure that these licenses have the exact correct name of the business with the same business address and phone number. As a matter of fact, all of your online and offline docs should be done the same way. I had somebody on our Facebook live stream, I believe, a week ago, and they were denied for a Staples credit card. And they were denied for the Staples credit card for the specific purpose that the phone number that they were using through their third-party verification system did not match the phone number on the application. This was an exact case where somebody had incongruent information, meaning that what they'd put out there before was different than the application. The application didn't match what they cross-checked, and as a result, they got denied. So again, you're making sure that all of your utility statements, your bank statements, your licenses, your Secretary of State information, everywhere your business is listed online, every application you fill out for financing, it needs to all have exactly the same information. If you don't have exactly the same information, then again, that's a perfect example. Somebody literally got turned down for the exact reason that their phone number did not match the third-party verification. And what their question was to me on the live stream was, who are they verifying through the third party? And although I said I can't verify that it is Staples, I will tell you it's probably data that goes into the small business financial exchange. So the SBFE, if you didn't tune in for our Facebook training on this, this is an organization that's owned by its members, which are all lenders. They're all banks. And then when you fill out your application data, the lenders submit that data to this big data warehouse that stores it. When you get a loan, how you perform on that loan, all that information gets put to the Small Business Financial Exchange. That means if you go in and apply for a loan, the information on the application you put goes into the SBFE. The next time you apply for another loan, they go into the Small Business Financial Exchange and compare the existing credit card or credit application data against what's already on file to see if there are any incongruencies. That's how this whole system works, guys. Okay. And it's not to be mean and turn you down. It's in large part to prevent fraud. Fraud is rampant in the banking industry. Large percentages of applications banks get aren't even real applications. We deal with fake bank statements all the time that we see try to come through here. So the bottom line is they're doing all these cross checks not as reasons to turn you down. What they're really looking for is discrepancies that can elude the potential fraud. That's why if you're putting information on an application that's different than what they're already seeing was already in Small Business Financial Exchange on other applications, this is why this can easily get you denied. So get your EIN for free from the IRS. You can get that from irs.gov. Set up your entity with the Secretary of State. Any entity will do, but you really want to stay away from a sole proprietor. You want to choose an LLC or a corporation. If you are a sole proprietor, well, at least change your name, or at least have a DBA so your name isn't the business name. But at some point, you probably want to change to a corporation or an LLCs that will help you minimize your risk. At least go with the DBA. Look, when it comes to entities, you should do a corporation, or an LLC isn't officially named as an actual entity with the IRS, but it is something you can do to limit your liability. Now, again, if you go with the sole proprietor, well, then at least do a DBA where your name isn't the business name. Again, but you need to keep in mind, if you're a sole proprietor, if you're a partner, if you're a partnership entity, you're always going to be liable for what happens to the business. You need to understand what entities do when it comes to accounting and when it comes down to liability. When it comes to liability, as a partnership or a sole proprietorship, you and the business are one and the same. You are the business. You'll always be liable for what happens in the business. A corporation, or if you choose an LLC, you're separate from the business. So if the business gets sued, you don't get sued, right? They can't sue you in the business. Okay, not to say they can't, right? We've seen extreme cases of negligence where CEOs, for example, were corporations and still got sued because people died because they did stupid stuff. So I'm not saying that can't happen. But what I'm saying is, for general purposes, if you don't want to be sued because you default on a credit card or because some crazy nut job out there is going to sue your business for some reason, choose an entity that will separate that liability, at least an LLC, even though it's not an official entity per the IRS, or just choose a corporation. Okay. Plus, the IRS says with a corporation, you have, or with a sole proprietorship, you have a 1 in 7 chance of getting an IRS audit. This is insane. I cannot believe this statistic if I would not have seen it from the IRS. 1 in 7 chance of getting audited if you're a sole proprietor versus a 1 in 50 chance of getting audited as a corporation. So if no other reason, just to not get audited makes sense. So again, make sure that you come in and choose an LLC corporation. Okay, so now that we've done that, it's time to start getting set up with the reporting agencies. So you want to go to DMB's website and look for your actual business. You can also do this on a link. We have creditsuite.com/reports. That's creditsuite.com/reports. Now, again, you can get your DUNS number using the same DMB link that I give you there. Okay, now a DUNS number is what's required before DMB will give you a Paydex score. So I have this question all the time in different formats. I saw one the other day, and this is what the guy said. He said, hey, look, he was on our YouTube or Facebook Live. He said, here was my problem. I had 3 accounts reporting to Dun & Bradstreet. I disputed the payments on one because it showed I was late, and I was never late. What happened was they deleted the account. Now, sidebar, let me explain why this is important for you to know. First of all, this happens. So what happens is if you dispute an item on your business credit report, there's a fantastic chance that the item will completely get removed, not just the late payment. You need to know that. If you dispute any discrepancy on a business credit report, the outcome is typically the removal of the entire item, including all good payment history, just so you know. So what happened was he said, then DMB took away my Paydex score. Well, they didn't take it away. What happened was you need 3 accounts reporting to them for them to give you a Paydex score. You had 3, disputed it, removed 1. Now you're down to 2. Do not know what just happened there. Now you're down to 2. And then because you only have 2, that's why D&B didn't give you that. So the bottom line is you've got to have 3 accounts to get that Paydex score. If you don't have 3 reporting to D&B, they won't give you a Paydex, and they also won't give you a Paydex if you don't have that DUNS number. You need both of those to have that Paydex score. It becomes very important. Now, you also want to check Equifax and Experian sites as well. You can do so again at the same link. You can go directly to their websites. I just saved you time by putting it all here. And if you go to creditsuite.com/reports, you could do a search to see if there's a record that pulls up. If so, you probably want to get that monitoring and actually check for completeness, okay? Because when you start to get credit with them, it will turn that around. But you have to know that Equifax and Experian give you failing credit scores when you have no business credit. If they know your business name, address, and SIC code, which they get from Secretary of State, when they know those 3 things, they create a credit report, you're given failing scores, then you need good established credit to start reversing those scores and make them positive. Do you have failing scores right now? That's what creditsuite.com/reports. That free search will help you search all 3 reporting agencies to figure that out. So next, you want to start with trade credit. You have to start with trade lines. Okay, these are also called starter vendors. Now, these are often people that offer terms like net 30, which means that whole bill has to be paid in 30 days. Coffee, shipping boxes, office supplies, all these type of things are sold through vendors. Now, not every vendor can help you like a true starter vendor can. Here's the problem. A lot of vendors, 97%, don't report. You don't want to get credit with vendors that don't report. The second problem is that a lot of vendors will not approve you if you have no credit previously established. So we've got to get credit with vendors that will give you credit when you have none and that actually report it, and those are not easy to find. So you've got to have vendors that will also give you approvals with minimal effort, right? And you also want to make sure they report to Dun & Bradstreet, Equifax, and or Experian, and as a true starter vendor, as I just mentioned. You need about 5 of these to move to the next step. Okay, you might have to apply more than once for these vendors. So some of them, like Uline and Quill, if you're a brand new business, they may decline you first time you apply. They may decline you second time you apply. And then if that happens, continue to buy the items that you normally would have purchased. And then what will happen from there is you could go back and apply again and again. And by the 3rd time, you'll get approved. I've never seen this not work. I've never seen anybody apply 3 times and get denied. Everybody I've ever seen, and it's a lot of people we've helped do this, by the 3rd time, they're getting approved. Typically, the 1st or 2nd time you can get approved. Okay, you need to buy some things you don't need. Sometimes people ask me that too. They say, hey, I'm in this industry. How can I possibly find things at Quill or Uline that I need? Look, sometimes you might not. Gimplers and Grangers sell outdoor supplies. I buy batteries there. I buy first aid kits. I buy things that we just had our smoke detectors, batteries die here in the office. So we needed batteries, right? We get them from Gimplers or Granger. So typically it is stuff that you will need to buy at some point, but not stuff that you directly need for the purpose of growing the business in some cases. This is a sacrifice. Suck it up, buttercup, as my mom would always say, because that's what it really comes down to is, look, vendors are the sacrifice. You have to sacrifice and sometimes get credit with vendors you normally wouldn't, and sometimes even buy some things you normally wouldn't buy. But the trade-off is worth gold because they're giving you trade lines that help you jumpstart your business credit profile and score. So again, worth its weight in gold. Now, sometimes these vendors will want trade references or bank references. Mention the bank reference. A trade reference is somebody else that you have credit with that maybe doesn't report. So for example, we pay Infusionsoft, who's our CRM company, we pay them a lot of money every single month. We've paid them a lot of money for like many years, but they don't report our credit to the business credit reporting agencies. I still use them as a reference though. If it asks for a credit reference, I still use Infusionsoft because I have credit with them even though they don't report. That's what trade references are. You may need to try a few times before you're approved for credit terms. Again, as we just talked about that, we just talked about the importance of applying sometimes 2 or 3. So here are some of our favorite. Uline is one that's not on this list. Quill, Granger, Gimplers. We've removed Gimplers from our startup vendor list for our clients because when you call Gimplers, everybody on the phone tells you something different. We verified with their underwriting department, they do report to D&B, but if you call them, they always say something different, so we stopped referencing them as much. Uline, Quill, Gimplers, Granger, these are some of the starter vendors that can help you. Strategic Network Solutions is another one of my favorite initial vendors that you can get started with. Now, If you go to creditsuite.com/monitoring, you can get credit monitoring for $24 through our nav integration. That's Experian DMB. You will get access to Equifax probably into the first quarter of next year through that link. And we are about to roll out in a beta test only, just a beta, a brand new product where you can actually add items you already have to your Experian and Credit Safe business credit reports, including utility payments, which you can't even do that with Dun & Bradstreet. So this should make it easier to get your initial accounts added. But I got to tell you, this is only going to be a beta upon rollout. The first time out with us as a test and other tests, we're seeing some accounts report. We're seeing some other accounts not report. This is going to be groundbreaking to the business credit industry, but it's not fine-tuned yet. The reporting agency still has not successfully managed to get all accounts reporting to Experian and Credit Safe. But if you keep an eye at creditsuite.com/monitoring, you'll see that product as soon as it rolls out as we roll it into the next step of beta testing. So you got to know what's happening. You got to make sure that what you're getting is actually reported, and you got to address all errors as soon as possible on the business credit report. So get in the habit of checking your business credit reports. You can do that at creditsuite.com/monitoring. Get into the details, not just the scores. Look into your payment history. Look into everything that's being reported. And again, you can dispute with any of them directly to address errors. But as I mentioned before, you need to know that typically they'll just remove the entire account if you win the dispute, and you'll typically win, not just the late payment. So if you have good payment history, you have to really weigh whether or not you want that whole account to get removed from that one negative that you may have. So again, you can go to creditsuite.com/monitoring. You don't even need to go to business-credit monitoring. You just go to monitoring and get that. You can also go to these bureaus direct, D&B.com, Equifax.com/business, Experian, smartbusinessreports.com. And those will get you reports with the direct reporting agencies directly. You can see D&B is $150 a month. You can see Equifax is $20. Experian, you do not want the cheapest because it's score only. You want the real report. The report and score $50. So with Experian and D&B, you're going to pay $200 a month, or you can check out that link for $24 through our nav integration. And Equifax right now, you still need to go to directly for $20 a month. They will be available at creditsuite.com monitoring sometime soon. Update the information if there are errors or anything that's incomplete. Okay, and you can go to iUpdate with D&B to do that. You can also go directly to Experian and Equifax to do that as well. Equifax.com/business/small-business. Experian.com/small-business/credit-information.jsp. That's how you actually have direct links to dispute information with all three of the reporting agencies. So with 5 to 8 of these vendors reporting, then you can start to move on to revolving store credit. We call this the retail credit tier. These will be companies like Staples, Office Depot, Best Buy. These are companies like Sears, all the type Apple, Dell, most retailers. And again, use the company EIN. Only use the social ever for verification purposes, as we've talked about before. Make sure you're not authorizing a credit check or a guarantee for that to happen. You need about 8 to 10 accounts reporting. Then you can start to move on to fleet credit, WEX Fleet Card, Conoco, BP, Chevron, Sunoco. Use the credit to buy, repair, maintain vehicles. You're actually coming in and getting fuel as well. And you can then start to also get auto vehicle financing here in this step. So in the next step, once you have a history of handling business credit responsibly, then you can start to get Visa cards, MasterCards, Amex, auto vehicle financing. Again, they may ask for the social for verification purposes. Never give the social as authority for a guarantee or for a personal credit check. Now, you usually need to have about 14 accounts reporting to get to this step, and there can be time and business requirements with some sources. But if you have 14 accounts in one account with a $10,000 high limit, you're typically going to be okay. Now, it also is going to have a minimum paydex score. When you want Visa cards, MasterCards, you're going to have a minimum paydex score of, in most cases, 78. 80 means that you literally pay your payments on time. So all that means is that you're paying your payments on average on time every month, that you're not paying late. Okay, that's exactly what that score means. So there are some criteria. One, you need to have 14 plus accounts reporting on your business credit reports, not just on D&B, not on Experian, across all three of them, D&B, Equifax, Experian. Add them up. I got 5 on D&B and 5 Equifax and 5 Experian. That's 15 total. You got the 14 you need. Requirement 2, one of them must have a $10,000 credit limit or higher for that to actually work. Requirement, or to get approved for cash credit. And then again, requirement 3, you need a score high enough, and the score just indicates you pay your bills on time. Or agreed. You go late on a payment, no worries. Pay it as quick as possible. And then as long as you're paying all your other positive payment on time, you're fine. We had a new Amazon account that our accounting team forgot to set up the auto payment on. It went late, but it didn't worry. We didn't even care because we have so many positive accounts that one negative account did not even impact our credit score. There's so much positive to offset the negative. This is my advice for both consumer and business credit. If you want to make sure you have good credit profiles and scores, get as much positive on there as possible. The positive then offsets the rare negative that you will have. Okay, so a recap. Start off with establishing that business credibility. Remember the website, remember the email address, the licensing, the congruency of all of your information. Okay, you need to make sure that you also get the phone number and the email address. And I think I already said that. Everything to do with credibility. My advice here is every line item you complete on an application, ask yourself if the answer you're putting there makes you look like an established, credible business. If the answer is no, you have to question whether you're going to put that information there. If you need a real physical business address and it asks for address, you tell me what looks better, a home address or a real business address? Business address looks better. Does that mean you have to get a business address versus a home address? No. It just means that fewer sources will approve you with the home address than a business address. Use a virtual address instead. And that's somewhere in between, but never use PO boxes, never use UPS addresses, for example. These type of things can easily get you denied. Get an EIN, set up that business entity with the IRS. You set up the EIN number with the IRS, set up the entity with your Secretary of State. You don't need to pay companies to set up an entity. Go right to your Secretary of State. Google Secretary of State, Florida, set up new business, and you'll find it. And usually most states make it fairly easy online to set up a new business. Then once you set up the entity, preferably choose a corporation, maybe even select an LLC, then go to the IRS website to get the EIN. Get your DUNS number at DMB. You might as well as get your BIN or business identification number from Experian as well. And the first step of this is at creditsuite.com/reports. Kick the process off with starter vendors. Remember, this is the trade credit, the Uline, the Quill. There's options here. You can go to Dun & Bradstreet and use their credit builder. They won't let you add a lot of accounts, and they'll only let you do it with DMB reports. So it's expensive and it doesn't really solve many things, but it is an option. Creditsuite.com/monitoring. Soon we will be rolling out the beta where you're able to add accounts, including utilities, to Experian and Credit Safe. That's going to help you expedite business credit building. As a matter of fact, the credit monitoring payment itself gets reported as it will actually get reported as well. So your payments there will report. And if you do have good personal credit, you can go to creditsuite.com/get funding. There is a shortcut for you where you can use credit lines with a guarantee to build the initial business credit and get a bunch of money in the process. Monitor your business credit scores. You can do that at creditsuite.com/monitoring for only $24. And move on to revolving store credit. When you have about 5 accounts or more reporting, fleet credit, when you have about 8 accounts or more reporting, and cash credit auto vehicle financing, when you have about 14 accounts or more reporting. Look, I spend hours on this topic more in depth next week or next month. If you are if you go to creditsuite.com/EIN, you will get my emails if you don't already. Next month, we're going to be doing a much more elaborate depth and deep dive into the program. This was just to give you probably a 30, 40-minute quick overview of this process. If you have any questions, though, feel free to give us a ring, 877-600-2487, info@creditsuite.com. Don't forget to grab our free business credit building guide at creditsuite.com/EIN. And we have a lot more training on our website, creditsuite.com, top right of the page. We have our own podcast, so you can listen to us on the fly. We have like 150,000 downloads on that. So a lot of people are listening on the go. You can also check out our Instagram, our Facebook, our Twitter for daily tips. We go live on Facebook weekly. We go live on YouTube weekly. So there's different formats where you can even ask us questions in real time and get a lot of different training that will address each aspect of this process, not just a quick overview. So now you know everything you need to know about how to build business credit from the ground up. If you have any other questions along the way, reach out to us and let us know. 877-600-2487, creditsuite.com. Thanks, everybody. Have a great day.